All right, welcome to today's episode on the HyperFast Mortgage Blitz. We are going to talk about how to make your offer with a loan look almost as good as one with a cash and what it requires to do that. Let's go. All right, Dustin. Today, we're going to talk about how buyers agents can make an offer that has a loan look almost as good, almost, not quite as good, but almost as good to the seller as one that is cash. Because a lot of markets right now have low inventory, big demand, and competitive situations, right? And there's a lot of ways you can win if that is happening. Unfortunately, most agents and the buyers they think about price, right? But there's a lot of stuff in the contract other than price, the terms, the timing, all of that matters.
Right.
The more you can get the timeline shortened or to match up with what the seller wants, because they don't always want a short timeline, but many times they do. The more you can do that and the more you can reduce the risk, the contingencies, the better deal they may be willing to give you on price or pick you over a higher offer. We've helped a lot of buyers win without being the highest offer, so I've seen that done time and time again. And if someone can come in with a cash offer, like that's king, right? They don't have financing contingencies and all that great stuff. They can close quicker,
right?
Like really, really quick. Like just pull a title search. It takes a few days, so they can close in like a week or less. Sellers aren't really often expecting that or needing that, so you don't have to quite get there. But one of the ways you can make your offer look almost as good as a cash offer is to shorten those contingencies or eliminate them,
right? And
to shorten your timeline. But you better not do that if you're going in with a Wells Fargo, a TD Bank, one of these big banks. They are not going to act quick enough in my experience. I think it's definitely a situation where you need a lender that can underwrite and approve quickly, get the appraisal done quickly, and close quickly. If they can, underwrite quickly, or we'll discuss in a minute, pre-underwrite,
right?
That can give the buyer the confidence to eliminate that financing contingency. So let's talk about that, and then we'll move on to the appraisal and the timing. How does the pre-underwrite work?
So, sometimes if a borrower has a more complex financial position, if there's multiple tax returns involved, businesses, investment properties, and different types of income, we can do what's called a hard underwrite. So it's like a TBD address. And what we'll do is we get all the documentation up front, and we're able to submit that to underwriting for a full underwriting review. That way, you go into the contract process knowing that all your income is checked out, and you're feeling good about it, and we're feeling good about it because we've already looked at everything over.
So you're actually gonna talk to the buyer ahead of time, hopefully before they're shopping for homes or before they're circling on one they like. Get their debt statements, their bank statements, their assets, their credit, job history, all of that, W-2s, tax returns, review it. See if anything weird pops up. That's because sometimes, if income changed or industry changed or investments changed or whatever, right? Underwriters can raise all sorts of flags, but if you deal with that up front, you're basically giving them approval subject to the property.
Right.
So that's pretty much eliminating, I'm not going to say all of the underwriting risk, but the important stuff, the stuff that usually could come up and surprise you, I think is out the window.
Yep. And as we talked about in previous episodes, we are a correspondent lender with USA Mortgage, so we have in-house underwriting, which allows us to be able to do that.
So that buyer's agent knows they can write an offer, and if they're approved already for $500K, like there's not going to be a last minute, oh, we didn't verify this income or count this, so you're not approved that much, right?
Yep, and that's how deals fall apart.
So you can eliminate that financing contingency if you need to, if you're comfortable. Better to have these options too, and not use them than really need them and not be available. So you gotta talk to the lender early in the process. Now, the appraisal contingency, obviously getting rid of that, shortening that time frame can help a lot. I think the key is having a lender that has good relationships with good appraisers that know the area. So, they know it's such that if the buyer's agent is confident in the price, it's most likely going to appraise for that, and that they can turn it around quickly.
Right. Yeah, and that's big. I mean, a lot of areas have very specific neighborhoods and different, factors that come into the value, where if somebody doesn't know that market, I mean, it can really swing an appraisal,
So my understanding is 7 days or less, sometimes even on the appraisals, is like what you can turn
if we
around.
have somebody that has that short timeline, we can get them done pretty quick.
And a lot of lenders are like 14 to 21 days on that, so getting down to 7 is good. And by the way, if in the rare chance the appraisal comes in low, even if you don't have an appraisal contingency, it is not the end of the world. We've had that situation before and been able to go back and renegotiate sometimes, or the buyer can put down a little bit more money, still pay the same overall price. They just have a smaller loan now because they got to put more money in, or sometimes they can take a loan that has a higher LTV. So all sorts of options. It is not a deal killer. Key is get it done quick, and 7 days is certainly amazing. And if that is done, then you're able to close in just 14 days, correct?
Right. Oh, yeah.
And that eliminates, I think, much of the time advantage on a cash offer, because cash offers aren't going to close the next day. Most sellers probably wouldn't want that anyway. They need a week or two to get their stuff together, get ready typically. And, it takes time to pull the title and all that anyway. So cash offers at the shortest are usually 7 days, but usually a little bit longer. So, working with the right lender, if you're a buyer, extremely important. If you're a buyer's agent, can make you look so much better to your clients and help you get more deals done. And if you talk to a good lender up front, go through these steps we discussed, it will give you the options if you need it. If you're in a competitive situation and you want the confidence to be able to consider waiving the appraisal financing contingencies, do a short close, you need to make sure you've got a good lender that has vetted your stuff up front. That's what I love about Dustin Brown and the HyperFast Mortgage, USA Mortgage team. If you guys want to learn more, go to hyperfastmortgage.com. We'll see you next time.
Subscribe to us if you want to make sure you get the latest and greatest HyperFast shows. And remember, we love reviews. We hope you enjoyed the show, and we will see you next time.
Hey guys, thanks for sticking around to the end. I hope you enjoyed that video, and if you want to see more, click right here. And if you want 100 real estate tips from my best-selling book, click right here to download them instantly. And if you're new to this channel, click below to subscribe and turn on post notifications so you don't miss out. And leave some comments about what you think on the videos.